What is up, everyone? Welcome back to our channel. This is Money Market Truth. I am Mark, and this is
Mo from OTB Clubhouse.
Hopefully you guys had a wonderful week. I know it's been really, really rough out there. A lot of stuff has been going down. Adobe, FedEx. I mean, the list goes on. Ford. So it's been really rough. But we're going to get straight to it because FOMC is happening this week. Mo is really kind of the expert when it comes to this. So we're just going to jump straight into that. We're going to cover, we're not going to do hot topics today. Not really. We're going to get into something a little bit later on in the episode, but we're going to get straight into the FOMC. So what you got on the dock there, Mo?
Okay, so we're going to get right into it like Mark said. So for tomorrow, let's pull the charts up. For tomorrow, what we're expecting is 75 basis point is already priced in. So as long as Powell goes with 75 and not 100 basis point, the market should be fine. Let me quickly add my chart. Okay, perfect. So we're looking at 75 basis point for tomorrow. As long as he says that we're good. The next point is quantitative tightening. That's a bit of a sensitive issue because a lot of people are focused on the interest rate, but the real bond market that we follow is telling us that if the quantitative tightening happens and they're already priced in, the market's going to react very negatively to it. So that's something that you want to watch. The goal for this month was 95 billion, and so far they've done about 16 billion in QT. If they say that they are going to increase that, because again, 95 minus 18, that's like 1/6 of what they've actually done, and there's only 10 days left to the month. So if they go with that, you're going to see a big sell-off in the market. So watch QT more than the interest rate, because that's what a lot of big players are focusing on. In terms of SPX, these are the levels. We're looking at, I'll give you the big levels first. 3,900 is the daily level, 3,850 and 3,830 are the daily levels. For the last 4 or 5 days, we've been hovering around these 1 hour levels, which are 3,875 and 3,860. These are hourly level. So the game plan today was pretty much not to do anything, but there were some wonderful opportunities that came through and we played accordingly. What I would like to let you guys know is usually when we go in bullish, right? So even though market's been tanking the last 2 days, the market actually did move up. The decision has to be made by the buyers this time because we came with a rally, right? So do they cover? Meaning, are they going to sell before Fed or are they going to hold their calls? Because today what we saw a lot of puts being closed short term and a lot of calls being bought short term. In terms of longer puts, they bought $21 million in long puts. And then just at close, we got 21 million puts for tomorrow's expiry for SPY. This came right at close, but all day we were seeing puts being closed. So what I'm looking for is the first reaction, which is usually incorrect. And the second reaction is usually the inverse. These are the levels of what I'm watching. In my opinion, there's so much happening. I've only covered half of it. You know what's happening in terms of FOMC, but there's a whole new story brewing in Russia. So Russia was supposed to give a statement today, but they delayed it, which is not good because there's something else that's happening, which is why they delayed it. So apparently it's going to be pre-recorded and it will be released around between 1 to 3 a.m. PST time zone. So EST would be around 12 a.m. Apart from that, the foreign minister of Russia is actually traveling to New York right now, which isn't really the best circumstance either for him to do that. So we might be looking at something coming. And one of the ways you can tell that is, I'll show you. So CCJ, this is a uranium ticker. It was running all day. So this is not good. Then you look at week. This thing went from 850 to 9. And this is commodity traders reacting to Russia. A lot of this stuff gets leaked. And I want to say this, even though it's obvious, sometimes, most of the times, people know things are coming before they come because they're reflective on the stock. So someone was buying uranium and wheat stocks all day. And this is telling you something non-peaceful is coming, because you don't buy CCJ stock. Again, you can say speculation, but it was being bought all day, and you don't delay a peaceful conversation as well. Apart from that, bond market dictate stock market. Sometimes bond market will react first and then the stock market will follow. So let me show you the rates. When the rates go up, it's a risk off, which is bad for tech and which is bad for growth. So we peaked at 3.6, took a dip. We're back at 3.5 again. This is not good. Another one. There's a lot going today.
Yeah. Hey, real quick though, Mo. So
Yeah.
you brought up wheat there for a second.
Yeah.
When it comes to wheat, do you still think, because we talked about wheat a while ago, that was actually one of the plays that you suggested for October. Do you think it's too late for people to get in, or do you think there's still some room for it to run significantly?
So, bro, if this goes haywire, like if the war news is even half as true as they're saying, like if they go, the whole point of Russia doing what they're doing, apparently, again, this is rumors, they're saying that it's very hard for Putin to get people to go fight. And so if he could do certain things like how US declares an emergency act, they could do more. He's trying to get civilians to go and fight. And if that happens, the whole commodity market gets disturbed. Then let's go back to the wheat chart for a second.
All right, let me pull it back up. There you go.
So just look at this. It can 1275, it can go and it squeezes from there. There is no end to it because people are just gonna hammer the calls, right? So it depends. Now, it's always better to get in early. My statement to you when we got into this play was we're in early, there's no flow. This thing we got in around 35. Right now, it's at 50. And most of the people took profits before. I think it went to 60, so about 100%. So I'm still holding half. If you look at supply and demand, simple logic here, there is a wall at 925. After 925, you don't have anything till 1111. So this thing has a lot of potential, but now it becomes a spec play, a speculation play, right? Because if you bought CCJ or wheat and let's say Putin comes on and says says anything that's expected or not so ordinary, these things will ease down. Another reason for wheat play was October. Winter is seasonality for this. So that's like you want to be in before. That's why I say buy stuff on demand, which is what we were doing. The time to buy this was around here. I'll give you guys another play at the end if we have time for Lunchbox because there's a lot going on. But back to another thing. So tomorrow is VIX expirations in the AM. So all that stuff adds to more moving parts. So it's not black and white FOMC. There's so much more happening. And when the market is leaning one way, bullish or bearish, you want to see who is in the control. Right now, bulls are in control. So they need to make a decision tomorrow with everything that happened with Russia. Do they want to sell before Powell speaks or do they want to hold till Powell speaks? That's what it is. People that are holding puts. So people that are holding puts, are they going to hold till Powell or are they going to sell before? Logical reason.
Yeah, they're obviously probably going to sell before just in case to take some profit.
So so the logical thing to look at is, so if I'm holding puts, let's say I'm the person who's holding 16 million in puts, I will sell it only if I'm in profit because the entire reason for me buying it is to cover the Powell announcement. So calls most likely get sold, puts most likely get held, meaning we might go red before Powell speaks because of the amount of puts that were bought, if that makes any sense. So
yeah, no, absolutely.
Now looking at VIX, first thing you look at it, this is a massive supply. We've been ranging here and it expires tomorrow. All that you need to know that is expiring tomorrow, it's sort of like quad bitching. People will be rolling contracts from VIX, which causes a lot of volatility. And then you add FOMC, then you add the whole Russia thing. Another thing they're talking about is China might be supplying troops to Russia, which is why this came out right before close. And Baba, let me show you. Baba started for 5 minutes. Baba, you saw that big dip here? started tanking. Look at the volume this came up with. So there is a whole mess that's happening right now, which is why me and Mark decided to get right into this today. And the way you want to maneuver on this is look at the flow, right? Look at the flow, which way is heading. Right now, until Russia news didn't come, we were going call heavy. Like I saw a lot of short term call, but after Russia news came in, puts started rolling in for tomorrow. So the biggest one I saw was 16 million. I think it was a put block. And I'll send more info to you after as well. So there's a whole bunch of things happening, and the only way we could really play this is you go level to level and look at the news, analyze it, and react. If you don't think you're good with macro, then look at trading on Thursday and skipping Wednesday altogether. It's because Thursday is when you will see a trend. If we do rip tomorrow, and the simple reason for ripping is if we go 75 basis point, none of the Russia things materialize, the puts that were put in, they will come off, which will cool off IV, causing a bounce in the market, right? So at that point, you will get ripped, and I'm looking to short. So I'm already in a lot of puts for October, and I'm looking to buy more. Because this will get corrected. Bond markets guiding towards it. There's a lot of things in the background that a lot of people that aren't macro traders can see, and that's what sometimes not understanding macro gets you. I'll add one more point, and then Mark will move on. We got in here on, I think, August 15. I'm going to try finding the clip, and this is when the market rallied 300, 400 points, and we said, come September, you're going to see a big correction, and this is just the start. FYI, the way the bonds are reacting, they are expecting a drop to 3,500. My personal target for SPX is 3,200. The only thing that stops it is quantitative easing, the opposite of what we're doing now. So I'll just say one thing. If we break 3,800, okay, all hell loose. If we stay above 3,900, we're going to get a rip, and most likely we can see 3,950-ish and 4K. So those are the key levels, but just be careful out tomorrow. It's not going to be as easy as it seems right now.
What I have noticed, though, the previous FOMCs, it seems like every single time the day prior either sells off a little bit or runs a little bit, but after he's done speaking, it ends up ripping. So you think that it's not going to be that case this time around?
Because of Russia and China, I don't know why you would delay a speech. That's not good, right? And then the foreign minister traveling here, that's not good too. And all this news coming off China and the Baba candle that I showed you. The reason why you bounce is the whole purpose of Powell is to stay consistent in what he's saying.
Correct.
Right? And the whole point of adding puts is hedges. So as long as he says what he's supposed to, the puts come off, which causes the market maker to buy back the stocks, which causes a rip and people start buying call. That's the whole function of the bounce. If we deviate from what he's originally saying, like, so if Powell comes in tomorrow and goes crazy bearish, those puts will not be removed. More puts will be added. Calls will be closed. So what you just talked about is so crucial. This is why we get a rip, and this is why we might not get a rip tomorrow. That was an amazing question.
All right. Yeah, hopefully. And just so everyone's aware, it looks like tomorrow we have or a few things. I mean, Powell speaking, FOMC announcements at 2 p.m. Then the Fed chair press conference at 2:30. But then Thursday as well, we have the jobless claims, which is also key at 8:30 in the morning pre-market. And then again, we have the Fed balance sheet at 4:30 p.m. after hours. And then it looks like we have something else is happening on Friday. I thought Powell was going to speak on Friday again. It looks like that's not on the calendar anymore. PMI. Oh, yeah. PMI is happening. The PMI composite flash is happening at 9:45 a.m. on Friday. It's a very busy week.
So Powell, just to confirm, Powell does speak at 11. This is my time, 11 PST on Friday.
Oh, he does? Okay. I'm not seeing that here on the schedule for some reason. Okay. Very interesting. Yeah, I'm looking forward to this. I'm very excited to see. Hopefully everything you talked about really plays out, because that would be pretty cool for us on our channel. So we'll definitely see what happens from here. Very interesting. Do you have anything else, Mo, that you want to touch on?
Yeah, I do, but we'll cover that at the end for Lunchbox.
Okay. All right. So what we're going to cover on now is somewhat of a hot topic, but not necessarily. If you guys always wonder sometimes why we get political on the show, I only talk about politics if it's related to money and investments. That's the only time I really touch on it. And Mo may actually not agree with me on my thesis here, but what I want to touch on is I kind of want to build off of what we were talking about last week. Last week we talked about the Inflation Reduction Act, and we were talking about how President Biden and Kamala Harris and all of them were celebrating about how we're the leader in climate change, which in fact was not true. Hopefully, you guys looked into it, like I mentioned last week. But some news came out here today on Bloomberg, and I want to pull that up here real quick because it's showing that Biden is going to be skipping the UN meeting as the climate change moves to the back burner. So this UN meeting that was supposed to occur, they were supposed to have all the leaders from all these multiple countries sit down and talk about how they're going to attack and fix the global climate issues that we're currently having. It's a crucial discussion that needs to be held with leaders because regardless of how you want to put this, like China could work on climate change, we can work on climate change, but if the rest of the world's not doing it, it's not going to really have a massive impact. So this meeting was real crucial, and President Biden decided to skip it, as well as I believe Macron is also going to be skipping it. But this is just to kind of show you what I was talking about before. And again, I'm not trying to get like political or anything, but election is coming up. Republican, Democrat, it doesn't matter. Look into these people. There's a saying where they say, it's not what you say, is what you do, right? And there's a lot of stuff that's always being said, but the actions are really not backing this up. And the reason why I'm bringing this up is because this is one of the things that President Biden ran on was, the climate change, green energy, blah, blah, blah. And I remember when he got elected, a lot of green energy stocks ended up running up significantly. And then it started cooling off because people noticed that it really wasn't a priority anymore. And then again, last week, he was talking about how this is a priority, but what is he showing? He's not showing up to this UN meeting, which again is a crucial meeting that everyone was supposed to, like the main leaders are supposed to come together and come up with plans on how to combat these climate issues that we're having. And one of the issues that they really were going to discuss on is how we can tax oil companies and the carbon tax and do all these different things. And the reality is, which I personally believe, so this is more of my opinion, I think we're really, really far off from actually going green, because there's a lot of stuff that needs to come into play worldwide for us to really fight this global climate issues that we're currently having. And I want to kind of build on this as well here real quick. So he's skipping the UN, as I said before. And if you noticed today, all these solar stocks and green energy stocks end up tanking, right? They went down on average, I would say about 3%, right, Mo?
Yeah.
Like quite a few of them. I mean, like Solar Edge, First Solar, Smog ETF, 10 ETF, they all kind of took a hit today. And it's because of that announcement that he's not going to meet the UN to discuss these global issues. Now, with that being said, another funny thing that end up getting released here is ESG. So ethics and investing, which is what ESG is supposed to be all about, right? However, Barry Diller, which is the Expedia chairman, he recently said that this whole ESG stuff is really just a glossy reports. A lot of people don't really follow all the guidelines and the so-called social issue and environmental issues that they're supposed to, and that in the end of the day, ESG is just a virtual signaling, right? And if you look at all these stocks that are supposed to be part of ESG, like Apple, for example, they always say, oh, we're recycling our products, we're doing X, Y, and Z, but part of ESG is also human rights, and all their stuff is made in Asia. So it's just very contradicting on what we're seeing and how we're moving forward to try to combat the global environment issues that we're having, all the way from like lithium, right? Lithium batteries. How do we source that? We source it by literally digging into the ground, drilling holes into the ground. But not only that, I remember reading a report, I'm going to pull it up here real quick, that lithium extraction causes surface water contamination. It also destroys other water sources. So it's partially responsible for the creation of toxic rain. So there is really no such thing as ethics and investing. I don't think they really go hand in hand. I know ESG is supposed to be that, but the reality is America is a capitalistic country, and it's hard to find any companies out there that don't have some sort of ethical contradiction or ethical issues. And the reason why I'm bringing this up is because I keep getting hit up. People are like, hey, what do you think about clean energy stocks? What do you think about TAN? What do you think about, First Solar? And I usually always gives a generic answer. I think it's good to have in your portfolio, but am I a real believer that we're going to go green energy within the next 10 years? I personally do not think we will. And the reason why is because we have too much corporate interest in oil companies, in all these other companies that really are destroying the environment and also kind of borderline teeter on what's ethical and what's not ethical when it comes to like human rights and etc. Because it's just the reality of things. And like I said, Barry Diller, the fact that he even is outspoken in saying that the ESG is just pretty much a joke, I would not lean too heavy on investing in green energy stocks personally. I think we're still a very long way from really going clean 100%, because even look like what was happening in Cali, right? Cali has had this massive heat wave, and the governor's asking people, hey, please do not plug in your EV vehicles. Please only use so much of energy for your AC. Please do this. Like, there's a lot of things that are in play that needs to be corrected first before we end up moving into clean energy. And it reminds me a lot of the marijuana stocks. Do you remember the marijuana stocks? Anytime there's some sort of news that comes out with marijuana stocks, they just end up running up, but then they slowly start dying off again because no one really cares. There's no real action being done to make this legal. So therefore, I don't really see a point of investing heavy into marijuana stocks. And I also don't see a massive reason to invest into clean energy stocks right now. What's your thoughts on that, Mo? 'Cause
So,
I think you may disagree with me on this.
so I'll give you a little bit of insight on weed stocks. So I started trading with weed when, not with weed, but I started trading weed stocks with when Canada legalized it, right? One of the things that weed stocks continue to struggle and will, so there's two issues with it. There's issues with financing. I could tell you in Canada, it's very hard for these companies to get financing. So what they end up doing is they end up diluting the stocks. So what they'll do, they'll go for private lenders. So where if you go to the bank, you might get 2%, 3, 4, 5. Now it might be 7. But when you go private lender, what they're doing is they're giving their stocks for pennies just so they can get loan. Another thing with weed stock is people were just growing at their house because it's that easy.
Yeah,
And
it is that easy.
smaller players were cutting corners and had a higher gross margin because they weren't following the guidelines. So that's why weed industry is going to struggle. It's just we don't have the monetary power to control and make sure they're enforcing all the guidelines. Like I could tell you, there's illegal dispensaries near my house that supply weed to different people. But moving on, we're not talking about weed here. In terms of energy, just look at where the money's going, because when anytime you want to have an opinion or where things will go, fundamentals are very important, but you want to also know what's happening. So if you look at total institutional investment into energy, it's actually gone up. And I don't think it's because energy is going to happen in the next 1 year or 2 year. It's because there's going to be government grants. There's going to be support from the big players on going that route, which will keep it afloat. Like if you look at ENPH, if we're talking about, this thing is at all-time high while everything is crashing. So the question you want to ask yourself is, well, who is buying this, right? And it's people like Warren Buffett, people, the big players, they're getting in. And because of that, you're not going to see a lot of fluctuation in it. Like energy is a big umbrella, right? Are you saying oil is useless, or are you saying like, because energy, so are you saying solar?
Green energy. Yeah, I'm talking about specifically like everything that's green energy, not the oil companies. I think they'll be perfectly fine. Yes, and I understand the end
Let's
phase.
look at solar, TAN, right?
Yeah, like 10 ETF is basically kind of flat for the past year. Now, end phase is obviously an anomaly. End phase literally ran like crazy. I mean, it's up. Let me go look up 97% in a year.
Like, so for solar, it's going to take a while, man. So just to give you an idea, like we got our roof, and a couple of years ago, we were talking about getting a solar roof, and the amount of money, I think it was like anywhere between 60 to 80K for a solar roof. you're not going to be able. So it's like buying an EV car to save gas. You're not going to save gas. You're putting 100K on a Tesla X model. You're not buying it to save gas, right? So solar, like, it's going to take time, but like, you never want to buy, like, I'll say the same thing. You never want to buy stuff when it's going up. My personal opinion, we can get into it later. I don't think it's the right time to buy the stocks that are at like high price right now. So I wouldn't be buying ENPH. Oxy, a whole different story. I'd be buying
Correct.
Oxy right now, right? Different stocks. So like, so if you come up to me today and you're like, Mo, I'm gonna buy what's Square or PayPal, I would be okay with it. Like, in terms of, like, I would not mind buying it either, because you're not buying in January. I understand it's down. Like Ethereum, I understand it's down, but if you're like, Mo, I'm gonna start buying at 1,000, I think it can go down to 300. I agree with you, and that's how you dollar cost average or start buying. So even though we know, or we actually never know anything, even though there's a high likelihood that the market goes down, it's okay for people to start dipping their toe in the market now, not 2 months from now, not 4 months ago. In my personal opinion, I will start looking at buying around October, mid October. That's when historically most of these recessions bottom. Not saying this will bottom. There's, if the QT goes, this goes for long. But if you have, let's say, 100K for simplicity's sake, and you're like, I'm going to start with 30K. If I had that 30K, it would happen in October. So but yeah, like, this is going to take a while, but it won't go, like, I wouldn't compare it to wheat stocks either. That's all I'm trying to say.
Oh yeah, I got you. That was probably somewhat of a bad comparison because the way to make money is obviously different. I was just talking about more like I was comparing it as in the
You
excitement over it, right? I'm
you
talking
can
about like the
compare it to
excitement.
EVs, like how
Or
when
there you
EVs
go.
went
EV's perfect
nuts, like
example.
every company was like Rivian. What was the other one that was
Neo, it was Rivian, Neo,
Neo?
Workhorse,
Yeah,
all of them, yeah, all of them that end up, Nikola. A lot of those
yeah.
obviously failed, but I definitely see that. I don't see the. I understand for like an investment purposes that yeah, go ahead and invest in some of it if you see an opportunity. I just wouldn't go too heavy into some of these green energy stocks thinking that it was going to skyrocket because things are going to just go all green here in the next 5 years. I think they're still going to take some time for things to turn around. And then even then still there's some questionable things to look into when it comes to how these so-called green energy stocks are actually producing their whether it's EV vehicles, batteries, solar panels. Look into how they actually made it. If you're one of those investors who just wants to be ethical when it comes to investing, because again, like I said, I don't think there's really ethics and investing. I really don't think go hand in hand. Even though there's like the ESG, I don't think they go hand in hand because every single company has some sort of dirt or they're doing something that could be very, very much questionable. It's similar to like Beyond Meat, right? Beyond Meat, everyone's like, oh, it's the healthier burger. Obviously, I mean, if you're vegan and stuff, it's an alternative to meat. But I know some people are saying, well, it's also healthier for you. It's better for you. You're not killing animals and you're not putting all this processed food in your body. But then if you look at the ingredients of the Beyond Burger, it's significantly processed and it has a high level of sodium in it. So it's technically not better for you
And
than a
it tastes
regular
like
burger.
garbage too.
And it,
I
yeah,
don't
it
know if
tastes
you've had.
garbage.
I don't know
Yeah,
if you've
no,
had.
I've had it. It tastes absolutely horrible. So the only audience I could really see who wants to enjoy that would be individuals who are vegan or vegetarian. Don't shoot me. I don't know the difference between all those people who don't eat meat. How about that? And it's just what are your real goals for investing into these? Are you trying to make money or are you trying to be morally right? Like what is it? Think about that prior. But I don't think there's ethics and investments. I don't think they go hand in hand personally.
Quick note, Mark, just because I've been watching ENPH and we were actually looking to buy puts. The CEO has actually been selling his stocks. So he sold 30 million last week on Friday, I think. So he's taking profits right now. So
Yeah,
just
but I wouldn't look too deep into that because I mean, my God, if things ran up 97% in a year, I would take profits too if I was a CEO, wouldn't you?
no. These are early signs. He's not selling like one go. He's slowly like putting his market share. These guys tend to know, like, there's something behind it. There's a big put block that came for all these names. Since we're talking about it, like if people are investing, I'd wait. Like even if you believe in it, there's going to, in order for us to really truly see that liquidation in the market, every sector is going to take a hit. Like if you look at banking, it was strong. Now XLF is starting to give up. That's how you see a market to go down. If XLF, XLE is strong, somewhat it's going to mitigate the margin called and all the other bad things to happen. So all of them need to get to a certain point for us to drop.
Yeah, that was pretty much it. I was going to kind of just touch on it, just kind of go back on what we were talking about last week when it came to these clean energy and being the leader and climate change and everything. So yeah, that's pretty much all I got when it comes onto the hot topic. Is that Biden's not planning on going to the UN, so therefore the stocks were kind of crashing. What you got, Mo?
Okay, let's do Lunchbox.
All right, let's do Lunchbox. You want to go first? Or you want me to go first?
You can go first.
All right, let me go pull up this chart real quick. So honestly, everybody, I am cash. I'm majority cash right now. Only thing that I bought in the last couple of days was Google. Now, I think I pulled up the Google chart before in the past. And let me see if I could pull it up here real quick for y'all so you can see what I'm really eyeing when it comes to Google. So share. All right. You can see my charts here, and I think I'm pretty much showed this before in the past. The first demand zone that I had was anywhere from $99 to 105. Once it got to 103 is actually where I bought it. It's currently at 101. It seems to be kind of lingering around here for the past couple of days, because if you go to let's go to the daily chart real quick so you can see it's definitely touched this demand zone quite a few times. Never really broke out of this box, which I had as well. And now it's really teetering on the bottom of the demand zone. So once that demand zone breaks, I definitely think we're going to go to the $85 range. And that's really where I'm going to be buying. Now, if you're wondering how many shares I actually bought in Google, I only bought 4. So every time when I talk about things that I'm buying, I'm literally just buying maybe like 2 to 5 shares. I really don't go too heavy because, again, we are going to most likely go down. I'm not trying to be a party pooper. And people are probably saying, well, why are you still buying? Because I have spare cash and I'm willing to scale in slowly, because you never know. Things can just reverse overnight and all of a sudden everything's over. You never know. That's the reason why I'm scaling in at certain key levels I have created here. I'm looking for $85 for Google to buy a lot more than just a couple of shares. On the other hand, when it comes to what else I've been buying, now I don't talk about this publicly a lot because I personally don't think it's anybody's business, but I have a new Roth IRA that I created, and I only have ETFs in there. Only a few, like 4. That's all I have in there. One of them that I have and I want to share with y'all is, because I had noticed no one really talks about it, is VIG. Now, VIG is a dividend appreciation index fund by Vanguard. I really haven't heard anyone talk about it, but if you like dividend stocks and you've been investing like AT&T, or you've been investing in Verizon or whatnot, or Home Depot, take a look at VIG. It's not too bad. These are just the stocks that are within it. It does have somewhat of a high expense ratio. I think it's 0.07, but they have Microsoft, JP Morgan, Johnson & Johnson, Walmart, United Health, Visa, Home Depot, Procter & Gamble, Comcast. These are all relatively good company, and it's balanced relatively well. So you don't see anything that's like just like 20% in this fund. It's 4%. The highest one is Microsoft, and I've liked it. I've been in it. It's obviously down for the year though. Of course, I think it's down 14%. But take a look at VIG. Again, it's not financial advice, but if you're interested in dividend stocks and you kind of want to scale in, or if you're interested in just like Johnson & Johnson, or you're interested in Microsoft, or you're just interested in Visa and Home Depot, take a look at this. I think they have some pretty solid companies within it, and the performance overall is pretty well. It's an ETF, it's Vanguard. You can't go wrong with that. And that's pretty much all I got from my Lunchbox, Mo. What do you got?
You know what? Let's do things differently. Instead of giving one, I'll go for 3 plays, but I'll go for it quick. And this is 2 of them I'm actually in. So
Okay.
I got in today. So like I'm putting my mouth where my money is. So let's look at the first one is Apple, which I told you about. There's a couple of strikes that I have, but I'll tell you the one that I really like. So Apple, let's clear everything. Let's go daily. Apple is at a point where between Apple and Tesla, they're carrying the market. So once SPX does turn, it is going to drop. Now, if you know anything about how I trade, I always like to short the weaker tickers in a stock, right? But at this point, Apple has so much room to drop that I can't ignore it anymore. Like Google's at 100, whereas this thing here, top was 180. This thing's only retraced about 30% from the highs, right? So I'm watching Apple. So here's what I have. I have the 140 October 21 puts, right? We added them at 2. It got to 3, sold half, holding the rest. I think those are around $1.88 now. I'm still holding half. The ones that I added today was Apple 150 for next week, and those are, I added them at $1.68, and they went to $2 briefly, which I told people to take profits if they're in for short term. But long term, I can see these things go 5 to 7. I think Apple, it will take it one day, one red day. The next one should really get it back to 149. I don't know if 149 holds or not, but if 149 breaks, you are going to see the premium go from $1.68 to roughly anywhere from 15 to 20. For now, on a retest of 149 for next week's, this thing can go around 5 to 7. So Apple 150 next week or Apple 140 for October 16. That's what I got in. The next play that I have is CAT. This is pure flow. I'm gonna delete so it doesn't get confusing. This is pure flow. So they have earning in 37 day. The flow is about 7 million in puts for 170 put for October 21. You're gonna see me talk about October 21 a lot. That's the OPEX date for October. That is the most liquid chain for the month of October. And I think they're playing some earnings, and I think this could give you a FedEx kind of move. These ones are expensive, so this is only for large account. These ones I added for $4.75, so $475 per contract. I think it's for 170 October 21. I think these could easily go to 21. So 1 to 2x, right? That's what I'm looking at. The next one I'm not in, but I'm watching. If these war theories are correct or if something does happen, Silver, the ticker that I like for small accounts, is AG. So I made this for the team. I'll show you 3 things that I like about this chart. First is there's accumulation happening in these levels. The coiling, which is basically the move up and down, is getting tighter. So if you look at it, it was expanded here and now it's getting very concentrated, which means wherever the move happens, it's going to happen a big squeeze, right? The third thing is this is an inverse head and shoulder. So once we break the neckline, this thing can go. So in terms of supply, let me click on 851 breaks. This thing can get squeeze around. Let me give you the levels. I like commons here because there's no theta. So 908 breaks. We have nothing till 1059. So this is more like the wheat and the apron squeeze kind of play. If something negative comes in, people will just go. There's little to no flow in this. So once the flow happens, this could be a much bigger. In terms of every single play that I've given, it passes my technical check, it passes my macro check, and it passes my flows check, except AG, but it makes it high probability because of what wheat and apron did. The flow is not in yet. So once it gets in, the premium will just keep pumped. That's it for me, Mark.
All right, perfect. We will definitely follow up on this and how this whole week will play out on everything that we discussed next week. We're going to touch on that. I think that would be really interesting to see like what we got right, what we got wrong. I have a really good feeling that pretty much everything you spoke about is going to happen here this week. It's so just be careful. If you're a brand new trader, yeah, just be careful. Honestly, it's like what Mo said. Be careful if you're brand new because this is going to be a very, very interesting week.
Avoid trading tomorrow. Like you don't want to be a hero. Like just chill. Thursday will give you a better move. I promise you. Yes, there will be screenshots tomorrow. People making 4,000%. It might be like something that you want to ignore because people that are losing aren't going to post. It's just that simple.
Correct. Yeah. Control your FOMO. That's the best way. Control your FOMO. But that was pretty much it, everyone. Again, my name is Mark. You can find me on my YouTube channel called Trading with the Dummy. I've been dropping new content there, so check it out anytime you want. I would definitely appreciate the subscribe. And of course, make sure you subscribe on this channel first. And then Mo, where can they find you?
You can find me on Instagram on OTB Clubhouse, and on Twitter you can find me on OTB Shark Mo. Like, I would really appreciate if you guys do see value, tell your friends and family members about this, because it's completely free. Like, you don't really need to be stocks or options to watch this. If you're just interested in what's happening in the world, there's a good benefit of watching us, because Mark does talk about stocks and what's happening with Biden and the clean energy stocks. So there's so much that you can cover. We'll probably get into real estate next week.
Yes, and we also have we have several guests lined up for the future.
Yeah.
We're going to talk everything from, because this is, again, is money market truth. So it's not going to just always be about stocks or investing. It's going to be about everything surrounding money. So we're going to have some guests on here who are going to talk about other stuff besides just, trading and everything. So once again, everybody, my name is Mark. This is Mo. You're watching Money Market Truths. See you guys next week. Peace out.